Welcome back. The pandemic remains a top threat to global growth, and the World Bank is now warning of a hard landing in developing economies that continue to grapple with the spread of the virus. The international body now projecting the economy to decelerate markedly to 4.1% this year. Here with some more color on that is the World Bank's president, David Malpass, who joins us live from Washington, D.C. President Malpass, it's great to have you on the program this morning. I want to ask you, what is the biggest threat to global growth faced this year?
Hi, Brian. Well, there's been weak investment. There's several threats. One is inflation. One is the rising interest rates in the advanced economies. But fundamentally, it's this huge challenge of how do they engage in the supply chain when they really don't have much investment capital coming in?
Can you elaborate that on a bit more? I mean, you've really highlighted this growing divide that we're seeing among emerging and advanced economies as well. I mean, some of those things that you hit on really do magnify that divide that already exists.
Hi, Kiko. Each of the challenges that the world is facing really are magnified for the poor. Take inflation. It looks like it will last longer than had been hoped. And as you look around the world, while the U.S. And some of Europe are really doing this huge government spending that boosts demand. For a lot of the world, there's pent up demand. So as soon as there's room, they're going to be needing to restock their shelves. They don't have access to government bond markets that are robust. And so this is going to cause lasting challenges for the poor. And then add to that the likelihood of interest rate hikes that gets magnified because the poorer countries often have to raise rates more than the advanced economies. They've already a third of the developing countries have raised their rates. And so that just makes it look like 2022 is going to be a long, difficult year. And I'll come back to that original point that there's not capital being allocated toward the things that will create sustainable growth into the future.
So, President Malpass, how do those countries, those developing economies that are still grappling very much with the spread of the virus with lower vaccination rates, by the way, get that capital? How is the World Bank playing into that?
We do it somewhat directly, meaning we finance trade finance, for example, working capital finance at the short end of the curve. We've done quite a bit as the World Bank. We've lengthened the maturity of our borrowings, and then we're also working with countries so they can lock in the current low interest rates in what they owe to the World Bank in our portfolio. This is for emerging markets, for example. They can lock in fixed rates, and that might be a good idea in the current environment. So we can do some things like that, but frankly, they don't add up to as much as the challenge of will the advanced economies reorient their supply lines to draw from the developing countries and to allow working capital finance to go to those small businesses, new businesses, women-owned businesses. Those are being starved of capital really by the macro allocation in the advanced economies, the reliance on giant fiscal spending and the reliance on central banks that are really only using a couple of their tools rather than all their tools in order to grapple with inflation.
Now, what's interesting is that the fiscal impulse is still kind of necessary in some of these countries where more spending might be needed to get over the hump, especially of this Omicron wave. But at the same time, these are countries that are dealing with already large stockpiles of debt that they've accumulated through this crisis in what is also a monetary tightening environment. So how do you, as the World Bank, kind of advise them on making sure that your debt stock isn't too unsustainable, but then also making sure that you're doing the spending necessary to keep your economy afloat?
For a lot of the poorer countries, they don't have the luxury of choosing that. They're spending what they can on things like food, on education and health, on vaccines. We finance some of it, but the needs are really big. To give you an example, in 2022, with the expiration of the debt relief that existed in 20 and 21, the countries are facing. These are the low-income countries. 75 of the poorest countries are going to be paying $35 billion just in debt service. And so we can counter that with net flows from the World Bank, but it's just not enough to make up for all the money that's coming out of them to the creditors in the advanced economies. So you've got this double whammy. They're paying a very rich interest rate to the advanced economies at a time when the advanced economies themselves are borrowing heavily in global markets, huge amounts of borrowing from creditworthy countries, and that leaves no space for the poorer countries to have fiscal deficits or to have fiscal space in their economies. And the monetary policy can't be ignored. This idea of central banks buying duration and holding duration really alters the capital allocation in the world in favor of overcapitalized parts of the global market. So you get this. What the world needs is capital to flow to working capital, to the short end of the curve, to floating rate instruments. Instead, it's going in the opposite direction to these really long duration fixed rate instruments that the central banks are buying heavily. Even under the taper, they're going to still be major buyers of duration because they're trying to maintain the size of their portfolios even when they taper.
Let's pull back a bit here because we're talking about a global recovery in the context of the pandemic still. To Brian's point, the latest Omicron wave has only made things worse. You look at the vaccination rate, it's 70% full vaccination for advanced economies, just 5% for low income countries. I mean, how much of this recovery broadly can actually happen, especially in poorer countries when they don't have the basics here to get things back open again?
Yeah, it's been welcome that the supply has increased from the advanced economies and also from India. There were obstacles in 2021 with the supplies staying in the advanced economies in India. So now that those are freed up, but it comes at a time when some of the developing countries have hesitancy. So we work very hard on deployment, on helping the countries have the capacity and the desire, the actual intention to contract for vaccines and to bring them in. We can finance a lot of that, but just not enough as your numbers show. We work closely with the international community, and some of the efforts have been quite successful. We worked closely with the African Vaccine Alliance, AVAT, and that we were able to get a lot of contracts for deliveries into Africa, and so that's helped a lot, and that's one of the work streams into 2022.
World Bank Group President David Malpass, really appreciate you taking the time today. Good to talk to you, and hope to have you back on the show again soon.